This podcast episode is sponsored by HECM, Senior Home Financing.
Good day, seniors and active adults. Welcome back to our YouTube podcast, Get Your Weekly Slice, where we protect, inform, and educate you, our seniors and active adults, every week about what you should know as you age. It is about keeping you, our seniors, in the know. I'm going to talk today about part 3 of Senior Living Affordability. And I'm going to give you some examples of clients I've used in the past using the HECM / the old term reverse mortgage for their situation. And again, the HECM is not for everyone, but it works wonders for a lot of people out there who are in a crunch. And again, I'm going to give you some stories of how they were helpful for these families in their situations. And I'm going to begin with one. They had a home where they somewhat inherited it from the family. They bought it from the family, and it was in a great location. But the problem is that they weren't receiving enough monthly income from Social Security. And that really was their only income. They had no pensions, no insurance, or anything else other than their Social Security. And they were on the lower scale of what they were receiving. They were still making a mortgage payment for the house they were in. But unfortunately, because of one or the other's health conditions, a lot of their money went for medications, hospital visits, etc. And they didn't have a lot of disposable income. Therefore, if they needed a roof replaced, they didn't have the money for it. They needed the AC replaced, didn't have the money for it. Their taxes were increasing, even though they were homestead exempt, it still was becoming an issue month after month after month. So we set up and we were able to list and sell their property in an as-is condition. It was in a lucrative area of Orlando. And we felt we were going to be able to get enough money for them where they could sell that, purchase another home, use the HECM loan for purchase, and it worked. So they purchased a home for $200,000. So that means they had to put $100,000 or $105,000 down from the proceeds that they received from the other house. Keep in mind, they had equity in the other house, but it afforded them the opportunity to buy the newer home, transition into it that was in better shape, and it was going to be more affordable for them. And it worked out to their advantage, especially with the market going up as it was. They have equity in their house, a lot of it, that they purchased. But again, they were on the verge, if they didn't have some family members help them with the existing home, on the verge of losing that home and all the equity they had. So the HECM was a godsend for them. So they could buy another home, put half the money down they received from the proceeds of the original home. And then with the HECM, again, it's optional mortgage payments, monthly mortgage payments. So they don't have to do a mortgage if they don't want to. It just accrues as time goes on. But that's a situation that worked for them. So here's another example. Another example is this one lady. She got a home equity credit loan for her property to help her stay in her home. So she took monthly distributions, the way it was set up, for her from the equity that she had in the home. I mean, she did the mortgage. The home was worth, let's just say, 400,000. So she got a mortgage for 225,000, and then she had 175,000 in equity that was dispersed to her on a monthly basis. And that helped her pay a lot of her bills and stay in the home and pay for a caregiver to come in on occasion. So that was an example of her taking advantage of the equity that she had in her home, which was paid for, to supplement her expenses she was going to incur while she lived at home, aging in place. So that worked for her. And when she passed, the family allowed me to help them sell that property. And again, I'm a certified senior housing professional. I'm always there wanting to get you the most money. And this is a good example, because this example is that when the sister and brother-in-law came down, because her health declined so rapidly that they had to put her in a hospice location. And he interviewed an agent prior to me speaking with him. And that agent wanted a quick sell and for them to get rid of the property. And he felt that the property was worth more. I showed him the comps. I had it pre-appraised. And yes, the home was worth over 500,000. The agent he previously spoke to wanted them to list it for under 500,000 to get a quick close. When I came into the picture, I had it pre-appraised, and we had it pre-appraised for 575. Put it on the market. We had a lot of tire kickers that were looking, because it was going to need renovations. And it was in a great area of Orlando. So we priced it at that 575, and we ended up getting 570 for that property, as opposed to the previous agent wanting to list and sell it for under 500,000. So we got that family, or that estate, additional monies. They paid off the HECM loan for purchase, and there was money to distribute to the heirs. This is another example of how the HECM can work for you, given your situation.
This is Tim Linger. I'm your reverse mortgage professional. The federal government, FHA, has a very safe type of reverse mortgage for those 62 and above that live in their own home. How would you like to pull out 40 to 50% of your home's equity with optional monthly mortgage payments for the rest of your life? The basic rules are you must be 62 and above and live in the home. Give me a call. Again, this is Tim, 321-356-9229.
And I'm going to give you another example of a family that they were in a situation taking care of their mother, who was getting a monthly stipend from using the HECM loan for purchase to stay in her home. The daughter took care of her, and she had dementia going into Alzheimer's, but not full blown, but it was full blown dementia. So when she passed, they were in a predicament. They didn't have a lot of money. The daughter and the son who lived, now keep in mind, the mother who passed was in her 90s, and the son and daughter were in their mid 70s. They didn't have a lot of money. They didn't have anything saved. They lived with their mother, took care of the mother. the daughter mostly. So their situation was that they could try and stay in the home, which we attempted, because if the person whose name is on the title passes away, the HECM loan for purchase is designed to give the family, immediate family, up to 12, if not 13 months to decide if they want to purchase that home. And they get a discount, a 5% discount based off the appraisal. And it's all based off the appraisal. I'm not involved with the appraisal. It has to be appraised by the lender holding that HECM loan for purchase. So it never got that far because the daughter and the son were trying to put together some funds where they could purchase a home, purchase that home, which was a little bit out of their wheelhouse because of the down payment. So what they did is they sold some of their life insurance policies, and what IRAs they had, they cashed those in. They were able to get enough funds to buy a home in the area, which I helped them make it happen. So now they're in a place of their own, not the home that they had, the family had for 40 years, almost 50 years. But they're in another home. They're in a HECM loan for purchase or / reverse mortgage, whatever you want to call it. But again, keep in mind, they don't work like the old reverse mortgage. These are much more workable because they didn't take the home from them. It was the family couldn't afford that home that they were in. They didn't have enough money. So I helped them locate something that was more affordable, got them into a HECM loan for purchase. Now they're living in there and they have minimal income when it comes to Social Security, what they receive on a monthly basis. Their expenses are less. And the other thing that's good is again, they have optional mortgage payments. So in their particular situation, they're not making mortgage payments. So they're able to live, survive, live a good life. But again, it wouldn't happen if they weren't able to do that. And again, it's what I do as a senior living or a certified senior housing professional is connect people, listen to their stories, find out what their needs are, provide them with 3 different options. And what we both agree on, them most importantly, what they're comfortable with to make it work for them. So I'm here to support them while connecting them with trusted resources and services and allowing them to have options. Otherwise, they do nothing. And she indicated right out of the gate that she was so glad and so grateful that I was brought into her life by their elder law attorney to help them sift through all of this. And she was very comfortable with what we came up with. So I just wanted to share those 3 types of situations with a HECM loan for purchase. And I'm going to give you a 4th one. I'm working with a lady who's minimal, again, when it comes to Social Security. She's tapping into her IRA and her investment, and they're all less than $50,000. And she's getting a monthly out of that, but she has to pay that every month. Plus she's got a mortgage she's paying for. Now she's starting to rack up credit cards. And for her to get out from underneath this, she has enough equity in the house. She can do a HECM loan for purchase, pay off all of her debts, credit cards, get rid of the mortgage because she's going to a HECM with an optional mortgage payment. And then she doesn't have that stress anymore of not being able to afford to live in her house. So we're going through that right now. But again, I just wanted to kind of give you some examples of how the HECM loan for purchase works. for seniors. You have to be 62 and above. At least one of the couple has to be over 62. And the people that I use, I refer to, they've been in the business for 20 plus years doing the reverse mortgage HECM loan for purchase. And there's a market out there. I'm not sure if you're that person, but let's have that conversation if you think you are, or you're in a situation where you have a lot of equity in your house, you want to stay in your home, or else your health is getting so bad that you have to move in to an independent, assisted, or memory care community. Most notably, the assisted or memory care community, and it doesn't afford you an opportunity to stay in your house because of your declining health. The HECM can work that way as well, especially if you have a spouse who can live at home while you're in that assisted or memory care community. It's a way to access money to make it work for both of you. So if you're interested, let me know, give me a call. We'll set up an appointment and we'll discuss what your situation is. And I'll provide you with a minimum of 3 options as to what I feel is the best and what you are going to ultimately choose in your mind. So understand that. And then I'll give you one example on long-term care insurance. A lot of people don't have it, but the ones who do can still stay in their home. And if they have 2 issues with active daily living items like dressing themselves, taking a shower, making themselves meals, then they can start utilizing their long-term care insurance at home. But keep in mind, if they stay at home, that long-term care insurance, you have to pay the caregiver that's coming in out of your money, and then you send their bill monthly on a monthly basis to the long-term care insurance, and then they'll cut you a check. So you're going to be 30, 60 days out on making sure that your caregiver is paid on a monthly basis, but you'll be getting reimbursed. And that's one of the pitfalls with using long-term care insurance at home. You have to take care of the paperwork. But again, if you went into an assisted or memory care community utilizing long-term care insurance, it automatically gets paid right to that community. And also long-term care insurance, if you're able to have VA benefits, that as well will be directed right to that community. So again, I just wanted to give you some examples out of part 1 and part 2 of ways you can utilize what is available out there or what sources are available out there for you as you age, so you don't have to live in poverty, create stress, undue stress about what you're going to do, how you're going to make your payments, etc. There's ways that we can work together to make and remedy any situation that you're in. So I hope that helps. I look forward to having a conversation with you if needed, and continue watching my podcast on a weekly basis that drills down on things you need to know as you are aging. Get Your Weekly Slice. In closing, I hope you enjoyed today's Get Your Weekly Slice. If you'd like to discuss further today's topic, you can reach me via email at mike@your, Y-O-U-R, Florida, spelled out, Haven, Haven.com, or call me at 407-340-5291 to set up an appointment. I provide a free 1.5-hour in-person meeting to discuss your future plans on aging while providing you a minimum of 3 options to choose from. Don't forget to follow us and like us on Facebook and Instagram. While on my website at yourfloridahaven.com, sign up for my monthly newsletter, RSV to any of my in-person events, which are held at the Orange County Library, Smarter Senior Seminar Series events, and to view any and all of my videos and podcasts. We hope these podcasts are helpful. And if they are, please share with your friends, family, and neighbors by letting them know what we offer as certified senior housing professionals, designated real estate agents, to our seniors and active adults as they age. We're a connector. It is about keeping seniors in the know. Till next time, when you come back to get your weekly slice.
This podcast episode is sponsored by HECM Senior Home Financing.